I got to be honest, it doesn't make me feel good because I actually think the opposite is you have to get worried that there's, too many animal spirits back too early. I came into the year, I'd say, pretty optimistic that we, at least by the end of the year would be feeling a lot better. But you just don't want people, I'll just argue, you just don't want to chase companies that the fundamentals are just, nowhere near where I'd argue you want to go.
Sure. And I would add at the margin. I mean, if I'm a Fed official and I look at this, I go, well, we better tighten a little bit further because this isn't, we don't want these liquidity conditions.
Yeah. I mean, it's almost like when the SPACs were going crazy, right? Like, if you can just put that out there and issue those willy nilly, you have to worry that, like I said, I say the animal spirits, but however you want to put it. Yeah, you're right. That we talk about the Fed worrying about financial conditions loosening too much. They might look at this as a sign. So
let's talk about what you do in a year in which, I'll just keep the analogy going, the economy may be headed towards an iceberg. Do you just party while the music's still playing? And, when I hear people say industrials and cyclicals, I totally understand what they're saying. And it might work for the entire year. Who knows exactly when the timing of this is going to hit? What do you do in the meantime?
You're right. I mean, because the hard part right now is, you talked about it earlier with every single CFO from a bank, and pretty much everybody's in agreement now that there's likely to be a recession, sometime this year. And, I think most of us are piled in on the second half. So has the market already discounted it last year? Now, typically you don't get a market bottom before the recession actually starts, but hey, typical versus what ends up happening, you never know, right? I think my thing is you stick with your game plan of, the market almost always moves in advance of better economic data. So just focusing on economic data isn't going to really help you time the market. So I still say, though, you got to be careful, be invested in areas where they can survive through the recession, because if you don't survive through it, you can't possibly benefit after. So
Sure.
I think that's the way to play it.
A couple of examples, and it sounds like you're also looking for companies where the bar might be very low. So, for instance, Amazon, Anheuser-Busch, is that right?
Yeah, and I think, Amazon's a great one, because let's say we don't ever go into recession. I mean, I think you've got a pretty quick upside in that thing because, Amazon, no doubt about it, the earnings would get hurt in a recession. But again, I'm not worried about them going out of business. In fact, I argue they would emerge from a recession probably stronger because, maybe one of those stocks you talked about as a meme stock won't be around anymore. And let's just say other competitors won't be around. So I think that is super interesting. The other one, Anheuser-Busch, is a different story, but, another one well off of its pre-pandemic highs. Great brands. Again, don't have to worry about it in a recession because, frankly, alcohol consumption does not fall during recessions. People trade down a bit, so it would hurt their earnings somewhat, but again, not worried about it. If you don't get a recession, you probably continue to have people buy premium beers, and that helps them pay down their debt quicker, which then allows them to more quickly return cash flow to shareholders.